Hello all the CA Foundation students. This is a super quick revision of a 10 marks chapter of Partnership Act. Partnership comes for 18 to 20 marks in exam. In that 10 marks will come from unit number 2 of Partnership Act. I will do a super quick revision covering out all the concepts inside because there is no question of expectation in examination. Okay, so don't expect and become fools in exam. So let us read everything and all the core concepts that are contained in unit number 2 of Partnership Act. Let us cover everything in less time. Okay, so let us begin. First one, state the modes by which a partner may transfer his interest in the firm in favor of another person, under the Indian Partnership Act. Okay, in simple language, I will first tell you, listen carefully. A partner cannot transfer his partnership to another person. He cannot do. What he can do is his rights in the partnership he can transfer. What right? I have a right of share in profit. That share you can transfer. I have a right in assets at the time of dissolution. That right you can transfer. Means what you can transfer? Monetary interest in the firm you can transfer to some other person. Sir, why I will transfer? I can transfer for 100 reasons. The best known reasons are mortgage. For example, I went to a bank. I took a loan. Bank asked for security, mortgage. I said, I don't have any asset security. I am a partner in a firm. In that firm, I will get a share in profit. That share I will transfer to you. Okay. If not sufficient, I will get this much amount of share in the assets of the company at the time of dissolution. That also I will transfer. This you can do. So, by sale or mortgage or by any other reason, you can transfer your partnership interest you can transfer to some other person, but with the consent of other partners. You can transfer. Sorry, 1 point completed. 2 points completed. Okay, a partner can transfer his partnership interest either by way of sale, mortgage, etc. Point number 1. He can transfer only with the consent of all the other partners. Number 2. Understood the point? So on a mutual confidence, you can transfer. Mutual means everyone should agree to that. Sorry, you can transfer. Number 3. The other person who takes your share of profit and share in assets, can that person interfere in the business? No. Can he get the share in profits? Yes. To that extent, we will transfer to him directly. So EMIs will be deducted through share in profit. But he cannot participate in the assets of the company. He cannot demand for the accounts of the company, and he cannot even inspect the books of accounts. Generally, partners in a firm will have power to inspect the books, power to demand for the books of accounts as well. But this person cannot, because the bank is not a partner to the partnership firm. It has only received the share in profit and also received the share in assets at the time of dissolution. Clear? That's it. Answer completed. Section 29 of Indian Partnership Act provides that share in the partnership is transferable. Share in partnership is transferable. Partnership is not transferable like any other property. But partnership relationship is based on mutual confidence. Okay, you can sell your partner's share by sale, mortgage, or otherwise. Next, but the other person will not become a partner, will only become the transferee of partnership interest. A bank, A is a partner, transferred share in profit, share in assets to bank. Now bank will become partner. No, bank will become transferee of partnership interest. Interest means not interest person. Interest means concern. Next. So during the continuance of partnership, transferee and a bank is not entitled to interfere in business, cannot ask for accounts, and cannot inspect the books. Not entitled to interfere, not entitled to require accounts, not entitled to inspect the books. Okay. He will only entitled to receive the share in profits. Okay. Share in profits. That's all. On dissolution, it is continuation. Continuance la share in profits will get. Dissolution la he will receive the share in the assets. Share in the assets. Understood? Next. Can we directly transfer our share? No. Section 31 says that no person can be introduced as a partner without consent of all the partners. A partner cannot, by transferring his own interest, make anybody else as a partner. So just because of transfer of partnership share, other person will not become a partner, because in a partnership, one of the conditions, chapter number 1, partnership is an association of 2 or more persons. Okay, they enter into agreement Without agreement of all other partners, you cannot bring a new partner inside. Therefore, transfer of interest will not result in transfer of partnership because partnership requires consent of all other partners. Next. Whether a minor be admitted to the business of a partnership. Explain the rights of a minor in a partnership firm. Same. I will first explain the whole idea, then we will read. Point number 1. Minor cannot become a partner, but minor can be admitted to the benefits of a partnership. Minor can be admitted to the benefits of a partnership. Number 3. Understood up to here? Minor cannot become a partner, but minor can be given with the benefits of a particular partnership. Understood the point clearly? Yeah? Because contract with a minor is not valid. Because as per the Indian Contract Act, incompetent parties, one of the parties is a minor. Minor cannot create a contract. Minor cannot be made liable in a contract. But minor can be a party to a contract to take the benefits. So therefore, first, what you have to write in exam? Minor cannot be bound by a contract because minor's contract is void. 1 point over. Next, therefore, minor cannot become a partner in a firm because in a partnership firm, liability of the partners is unlimited. Minor as a liability and not attracted means from where the unlimited liability will come. Therefore, minor contracts are void and minor cannot become a partner. 2 points completed. Okay. Next, he can be admitted to the benefits of a partnership. Point number 3. So, first point, contract with minor is void and not voidable. It's directly voided. Second one, minor cannot become a partner in a firm because he cannot be liable to anything, but he can be admitted to the benefits of partnership. 3 points over. Next, so he can be validly be given the share in the partnership profit. Share in the partnership profit. If he takes the share in the partnership profit, he has some rights. Minor partner has right of his agreed share in the profits. He can have access to, see, AIC I call. Minor also will have a right to access the books, inspect the books, take the copies of the books. AIC he can do. And moreover, minor is saying that I don't want it to continue, I'm leaving. At the time he asks for settlement of accounts. He can sue the partners for accounts, but only when he is severing the connection with the firm. Means minor is continuing. He will continue for another 3-4 years. At that time, he cannot sue the partner for settlement of account. Settlement, when you should ask for settlement of accounts when you are severing yourself. Severing means separating yourself from the firm. Sir, I'm not separating, sir, I will continue. Then why you want settlement? Settlement accounts you can ask only at the time of you separating from the firm, not before. Remember, definitely they will twist the question in exam. Minor will be continuing. Then at that time he wanted to sue the partners for the accounts. Can? No. He wanted to leave. At that time he wanted to sue. Can? Yes, can. Next, very, very important point. Minor becomes a major. Automatically become a partner, will not become a partner. It is both. We will be giving him a 6 months time to elect, choose whether to continue or not to continue by giving a public notice. If he continue, very good. If he do not continue, he should give a public notice that he is no more connected with the firm. Understood the point clearly? Yeah? See, on attaining majority, he may within 6 months elect to become a partner or not to become a partner. Okay. If he elected to become a partner, then he is entitled to the share to which he was entitled as a minor. Same share, 1/3 share, 1/3 will continue. 1/2 will continue. 1/4 will continue. Whatever the share is there, that will continue even after becoming a major. But if we do not want it to continue, he will not get any kind of share in the profits thereafter. But he has to give a public notice, or else people will believe that you are still a partner and you will become liable. Next, Messrs. XYZ Associates, a partnership firm with XYZ as a senior partners, were engaged in the business of carpet manufacturing and exporting to foreign countries. On 25th of August 2018, they inducted Mr. G as expert in the field of carpet manufacturing as a partner. On 10th January 2020, Mr. G blamed for unauthorized activities and thus expelled from the partnership by united approval of rest of the partners. Examine whether the action of the partners was justified or not. What should have the factors to be taken in mind prior expelling a partner from the firm by other partners according to the provisions of Indian Partnership Act? This question was tested on expulsion of a partner. Expulsion of a partner. Let's complete it very quickly. Read the question just for a minute time. Same question can come in exam. Pause the video and listen. So now the question is on expulsion. See, whenever a question on expulsion comes, 6 points you have to remember. How many? 6 points you have to remember. Number 1, in order to expel a partner, first in the partnership deed, there must be a point on that. Means there exists a contract. Simply at the time of admitting a partner, partnership deed will be rewritten, or originally we will write a partnership deed. In that you should clearly write expulsion can be made in case of misbehavior or misconduct, anything. First you have to write that as a contract. Second one, majority partners consent is required. Okay, if there are 5 partners and I wanted to expel one of the partner, remaining 3 partners should say yes. Simply to tell, if there are 5 partners, at least 3 partners should say yes for expulsion. Then only expulsion will happen, or else expulsion do not happen. So 3 conditions. Condition number 1, contract must be existed. Condition number 2, okay, you can remove only with the consent of majority of partners. Number 3 is the most important one, good faith. Means out of any grudge, revenge, etc., you should not remove. There should be a logic for your removal. Understood? Therefore good faith has to be tested. So 3 conditions. Good faith means, how can I understand that there is a good faith? See, first one, expulsion must be in the interest of the partnership. Means in the best interest of the partnership only we expel him, not out of any grudge. Good faith test ki number 1 test. Number 2, I gave him a notice before expulsion. Number 3, I gave him an opportunity of being heard. If all these conditions are satisfied, for unauthorized activities done by a partner in this case, expulsion can happen. However, how you have to write in an examination? Point number 1, provisions as per Partnership Act. Number 1, a partner can be expelled under section number 33 of the Partnership Act. A partner can be expelled under what circumstances? 3 conditions. Number 1, there should be power from the contract. Number 2, majority partners have to say yes. Number 3, it should happen in good faith. Good faith has again 3 points. Expulsion should be in the interest of the partnership. Partner expelled should be given a notice. He should be given an opportunity to speak. That's called as the opportunity of being heard. Okay, sir, no sir, I'm not following all these. Can I remove directly? No. If you remove, that expulsion becomes a null and void. Means no legal impact. He will still continue as a partner. For that you have to give the conclusion. Next one, A, B and C are partners in a firm. As per the terms of partnership deed, A is entitled to 20% of the partnership property and profits. See, A, B, C are partners. As per the partnership deed, A is entitled to 20% of the partnership property and the partnership profits. Okay. A retires from the firm and dies in 15 days. B and C continue the business of the firm without settling the accounts. Explain the rights of A's legal representative against the firm. Very, 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 very important one. Okay, please look at the scenario first. See here, as per section number 37, listen carefully. Expected question again. See, expected means important question. I am not expecting anything. Nothing can be expected in exam. So see here, what is important in this connection? The important point is, there are 3 partners, A, B and C. A is entitled to 20% in the profit share and also partnership property. Okay. A retires and dies in 15 days. B and C continue the business without settling accounts. So now understand, whenever a partner die, you have to settle his accounts. Okay, assets, how much he has, liability, his share you have to reduce, balance should be settled and paid to his legal representatives. If he is insolvent, pay to the official assignee. You have to do any of these 2. Here it is a death case. Therefore, you have to give everything to legal representative such that he will go out completely. You have to afresh start your partnership with B and C. But in this case, what B and C has done, without settling the accounts, they continued the business. Okay, without settling the accounts, they continued the business. Now, legal representatives of the deceased partner will have 2 kinds of major powers. They have 4 powers. In that example, you have to write 2. Number 1, they will get the same share of profit every year till the settlement of accounts is completed. B and C continued business without A, but still A's money and A's property is involved or not. Therefore, even though he is not a partner, still he will get 20% share in the profits. Number 1, either they can choose that, or profit may come, may not come. If I take share of 20% on profit, if profit don't come, I have to bear the loss. Therefore, generally they don't go with that. Instead, they will tell how much is the partnership property, 1 crore. How much for my person? 20%, 20 lakh. into 6%. Regularly you pay 6% interest on that. That's it. You need not pay any profit share. Pay 6% of our capital. Simply, it's like a FD. So our money is blocked in your firm like an FD. So pay FD interest rate to us. So as per the Indian Partnership Act provides that where a partner dies, ceases to be a partner, and there is no final settlement of accounts between legal representative of deceased partner, in the absence of any contract, legal representatives of the deceased partner are entitled to claim either means this or that, such a share in the profits earned after death, which is attributable to his share. Means how much share he is having? 20%. That share you can ask. Or interest at the rate of 6% per annum. So either 20% share in the profits or interest at the rate of 6% on the property value. Property value is 1 crore. Profit is 6 lakh. Example, property, my property parties, 3 partners are there, A, B, C, 1/3, 1/3, 1/3, 3 lakhs is there. 3 crore is there. 3 crore my share of property is how much? 1 crore. 1 crore 6% or 6 lakhs 20%, whichever you want, you choose that. Sometimes what they will see, my property value is very high. On that, if I have 6%, I will get a good amount. But profits are very less. On the 20% also is very less. 6 lakhs I got profit. 6 lakh into 20% means 1 lakh 20. There I will get 6 lakh. So depending on the circumstances, legal representatives can demand either share in profits to continue in the same way or 6% of the interest on the property value. Next, Master X and a minor was introduced to the benefits of partnership S with the consent of all partners, very much required. After attaining majority, okay, more than 6 months elapsed, and failed to give a public notice as to whether he has elected to become or not a partner. If he don't take any decision within 6 months, he will automatically be treated as a partner. Later on, Mr. L, a supplier of material of Mrs. ABC and Co., filed a suit against Mrs. ABC and Co. for recovery of debt due. To what extent X will be liable if he failed to give a public notice? Can L recover debt from X? All the points, whatever we already read from the minor, that we have to write. In this case, yes, X will become liable. If you don't tell anything, I will take that he has accepted to continue as a partner. Within 6 months, such person may give public notice that he has elected to become partner or not. Such notice shall determine his position. However, if he fail to give, he shall become a partner. If minor becomes a partner, he becomes personally liable to the third parties. His share in profits will be same. In the instant case, since X failed to give public notice, he will become a partner. That's it. That's why if you read once, clear. Next, Mr. A, transferor. Transfer is share in the partnership firm to Mr. B, a transferee. Mr. B is not entitled to few rights and just now, first question we read in 29. You can transfer your partnership interest, but the transferee do not get a right in. During the continuation of the firm, he will get the profit share. At the time of dissolution, he will get the share in the assets. He cannot interfere in the business. He cannot ask for accounts. He cannot inspect the books. Again expulsion. Again expulsion. I need not. Again minor. Repeatedly same question will come. Yeah. Okay. Important. Yeah. Again. What do you mean by implied authority of partners in a firm? Point out the extent of partners' implied authority in case of emergency, referring to the provisions of Indian Partnership Act 1932. Okay, let's have a clarity on this. So listen, there are 4 to 5 sections connected to this. All the sections related questions we are going to do now. Okay, with that the main tough areas of this particular unit number 2 will be completed. Clear? I will check and I will cover all those areas for you such that you will feel comfortable when you are going for your subsequent preparation today. After this session, immediately what you have to do, whichever question bank you are following, if this is the question bank you are following, this is as per ICAI format. So risk free. Other question banks I can't give that guarantee because I prepared everything as per the ICAI norms. How point wise they will give the marks, in that way I prepared this. Okay. So anyway, let's come back to the main story. If a question comes on implied authority related and rights and powers of a partner related, okay, relation to that, if any section comes, how to react, let us try to understand. Okay. So let us see what are all the implied authorities of a partner. Implied authority is a concept where normally, depending on the nature of business, the partners will get some powers. Okay, I repeat, depending on the nature of business the partnership does. Okay, in that ordinary course of business, automatically partners will get certain powers. No one need to give them those powers. Automatically they will get those powers. Those authorities, those powers a partner has, we call as a implied authority. Implied authority. Let me explain. A company is in a partnership firm is in real estate business. Real estate business. Okay, a partnership firm is in real estate business. Generally, what powers a partner will expected to have, you don't know which power a partner has. Normally, what powers a partner will have generally in a real estate business? He will have a power to, he has a power to purchase cement bags. He has a power to authorize for sand purchase. He will have a power to recruit the labor into the contract. He will have a power to give some electricity connection cost, etc. Real estate related any activities going on now, every partner will have implied authority to do that. So implied authority will not come from the partnership. Implied authorities will be expected, will be assumed from the nature of business you do. From the nature of business you do. There is a CA firm. There is a CA firm. CA firm la partner cannot be expected to have power to purchase cement bags on behalf of the firm, because our firm is not doing the real estate. Na? Our firm is not doing construction. Na? Our firm is in CA. Okay. Any purchase of legal books, for example, I wanted to purchase, say for example, Sampath Iyengar's income tax full set 12 modules. It is costing 60,000. I wanted to buy entire 12 books set, 60,000 rupees. Clear? One of the CA called the law house. He said, sir, please send me Sampath Iyengar's total set of 12 books. He sent. He's raised a bill of 60,000 in the name of the firm. Okay. Firm partners came to know about this. They said, why you need all those things now? I said, I purchased already. Now, firm will become liable to pay to the law house because act of one partner become the act of the firm. Clear? And moreover, outside party, third party is then a person who sold. He will be having a power now. He will have an authority. What he will tell? Hey, I don't know what that partner has powers in your firm. Generally, a CA firm partner will have a right to purchase a legal books. That's all. It's an implied authority. This is how doctrine of indoor management in Partnership Act will work. Doctrine of indoor management in Partnership Act. Outsiders are protected. Means outsiders will assume that a partner has an implied authority. Whether really he has or not, between you, what is there, we don't know. Your business will make us to assume that partner have that power. Those concepts are called as implied authority. Whenever question comes in implied authority in exam, always please do remember two very, very important sections. 1922. 1922. See, subject to the provisions of section 22, okay, the act of a partner, purchase of legal books, which is done to carry on in the usual way the business of kind carried on by the firm, binds the firm. Means what? If the act done by the partner is relating to the business done by the firm, then his act will bind the firm. Next, that authority, generally what assumption outsiders will make? Generally business is CA, he is purchasing CA related books. That authority here we call as implied authority. Okay. In the normally this is an implied authority. However, so normally he will have that authority. We call that authority as an implied authority. Okay. However, in some cases, implied authority will not be there. Okay. What cases? Whenever there is a dispute between firm and an outsider, dispute should go to the court. Na? Some partner should file a case. Which partner? That is not an implied authority. All partners generally cannot do. Only with who in the deed, partnership deed, which partner has that power, only that partner has to do that. So, submit a dispute relating to the business. Okay. Implied authority does not empower him. Means in these cases, implied authority will not be there. Remember at least 6 points in this. Okay. Sir, already there are only 6 points. Na? No. I'm not telling like that. 1, 2, 3, 4, 5, 6, 7, 8. Like this it is there. Na? At least 6 out of this you remember. 8 you have to remember. Yeah, even if 2 concession I will give. Remaining 6 you have to remember. Submit a dispute to the arbitration. Sir, arbitration means what? Submitting the case to the court is implied. Arbitration is different. Arbitration is a private resolution, not to the court. like judicial authority, everything will not be there. Privately, one person will come and sit with us and he will resolve. Okay, so submit a dispute to the arbitration. In this case, implied authority won't work. Only that partner who have that power can do. Next one, open a bank account on behalf of his firm in his own name. Partnership firm is not a separate legal entity to create and open an account in its name. Therefore, what we have to do, one of the partner name the account will be opened, used by the firm. In whose name it should be opened, which partner, not generally in the name of all partners. No implied authority at that time, you should clearly tell. So open a bank account. So submit the dispute to arbitration, opening a bank account. No implied authority. Only that partner who have that power can do that. Next, compromise any claim. Compromise a settlement. If you go for a legal settlement, which partner should go to the court and ask for settlement? That also is not implied. Only that partner who have a power to do that by the deed should go and do that. Next, not only just compromise. We filed a case, we wanted to withdraw. There also implied authority won't work. Admit any liability. Now we are telling, yes sir, mistake is ours only. Our firm only does the mistake. Our firm is not a separate person. Some partner should go to the court and admit the liability. Which partner? That also not an implied. Only that partner who have a power through the deed can go to the court and do that. Next, acquisition of immovable property. Not only acquisition, transfer, etc. Anything. All these things, implied authority do not work. Implied authority do not work. Next, section 22. In order to bind the firm, means if you wanted to make the firm liable for the acts of a partner, an act or instrument done or executed by the partner on behalf of the firm shall be done and executed in the firm name. Okay, means what? For example, in the previous example, the CA purchased the books from the law house. Billing should be done in the name of firm. That means your intention is to bind the firm. Then only firm will become liable. If you purchase in your own name and then you are telling firm pay the money, firm will not pay. In that case, implied authority don't work. Collect the money only from him because billing is not done in the name of the firm. So that's why it should be executed in the firm name. Executed in the firm name. Or you should at least have an intention to bind the firm. If that is not there, firm will not become liable for the acts of the partner. Next one. Partner indeed virtually embraces the character of both principal as well as agent. Principal as well as agent. Another section is section number 18. Hey, first section number 4. Definition of a partnership. Partnership is a relation between two or more persons agreed to share the profits of a business carried on by all or any of them acting for all. First you have to write that point, 1 mark. Okay, for this 1 mark. Next, therefore, what we have to understand, business is carried on by all or any of them acting for all. Means what? Every partner is both a principal as well as a agent. Both principal as well as a agent. So a partner is a agent of the firm for the purpose of the business. So he virtually embraces. Embraces means he will take into consideration both principal as well as agent. We already read in our first unit. So now when he is agent, when he is a principal, when he does anything for himself, for example, all partners decided to bring 5 lakh extra capital, not capital. Capital will be brought at the beginning. Extra capital they wanted to bring. Okay. Partner A, partner B sat for a meeting. Partner A, B, C decided, let's bring another 5 lakh capital. All the three brought 5 lakh. Now, B, C are smart fellows. A brought 5 lakh and kept as a capital. B, C said, act of the partner become the act of the other partners. So if you bring 5 lakh, it is as good we also brought 5 lakh. That's overaction. That's what he said here. So far as he acts for himself, now I am bringing 5 lakh for me, not for the firm. After giving it to the firm, it becomes firm. And his own interest in the common concern of partnership, he will be principal only. So if he does anything for himself on behalf of the firm, then he is considered as a principal. Okay. And as for he acts for his partners, he will be agent. Now he purchased books on behalf of the firm, then he will be treated as an agent, others will be treated as a principal. So the principal distinction between, listen, normally normal agency will be there, contract agency. In normal general agency, what will happen? Not generally, what will happen? Agent will work for the principal. Adi profit loss, he is least bothered. He don't have any interest also. Okay, every month I will get a fixed salary. If I sell the goods, I will get some extra commission. That's all. I will get that salary even if I join elsewhere. I will get that commission even if I am agent to some other person. So for him, least bothered. Whether the owner is successful or unsuccessful, or hit or flop, he is least bothered. But a agent in a firm is not like agent there. He is only a mere agent. Mere means only just an agent. But here, partners are agents, but their money is also involved there. Therefore, there in a normal contract of agency, you will see only a mere agent. Here you are going to see agent having interest in the firm. That point, if you don't write, 1 mark for it. So the principal distinction difference between him means partner as an agent, and a mere agent, normal agent, is interest in the other partners and the firm. He will be interested in the business. Okay, next. Section number 20. Again, implied authority ki linking section. 19 we completed, 18 we completed, 20 we are going to complete, 22 we already completed. It should be done in the name of the firm, or it should be done in the with an intention to buying the firm. 22. 19 implied authority. 18 just now we read. 20 also we are going to read. That's it. Main points will be completed. Remaining just to give a reading and leave. A, B and C are partners of a partnership firm ABC and Co. The firm is a dealer in the office furniture. Okay. A was in charge of purchase and sale. B was in charge of maintenance of accounts of the firm. C was in charge of handling all legal matters. See, now they divided all the powers between partners. A, B, C are 3 partners. Okay. So, A is in charge of purchase and sale. B is in charge of accounts maintenance. C is in charge of legal matters. Recently, through an agreement among them, it was decided that A will be in charge of maintenance of accounts. Okay, so they changed the agreement and they decided that A will be taking the maintenance of accounts, B will be given with purchase and sale. Okay, being ignorant of such agreement, M, a supplier, supplied furniture to A, who ultimately sold them to a third party. Referring to the provisions of Partnership Act, advise whether M can recover the money from the firm. What will be your advice in case M has a knowledge about the agreement? Listen, doctrine of indoor management. Doctrine of indoor management, what it will tell? Outsiders are protected again as the persons inside the company. There, indoor management. But they are not protected if they have the knowledge of irregularity. We already read that. Same logic will apply also here. See here, what has happened? ABC are partners dealing in office furniture. A will be taking care of purchase sale. Now changed the role. B will be taking care of purchase and sale. These are all internal agreements. Yeah. How come public will know about that? Correct, sir. Office furniture. Firm is dealing in office furniture. There is a firm. That firm is doing furniture business. They will manufacture furniture. Okay. See, now the question is, they will purchase furniture from Delhi, sell in Chennai. Supplier M is from Delhi. He supplied furniture. Same furniture they will sell. Furniture company, they are dealers, not manufacturers. They will purchase and they will sell. They are dealers. So, furniture company, furniture firm, furniture buying will become an implied, not implied, implied obviously. Furniture manufacturing company or furniture selling company, I will expect that partners have a right to buy furniture. Na? Previously, A used to do. Internally, they changed the role. A taking care of accounts and B is taking care of purchase of furniture, purchase and sale. So what happened? They changed the roles. M don't know about this. M purchased M sold the furniture to A. Later firm is telling, you sold to A. A actually don't have authority to buy. Okay, therefore firm is not liable. Go and ask A. No. Point is, if partner of a firm has a implied authority, okay, whether internally what agreements you made is irrelevant. Whether he has implied authority or not, what kind of firm it is, furniture. What I sold to him, furniture. Generally, a partner is expected to have a power or not? Yes. Therefore, internally what you agreed is irrelevant. But if M knows of this irregularity, then M will not be protected. So, section 20, what they say? Partners in a firm may, by contract between the partners, not with the partners, with the outsiders, within themselves, they can extend or restrict implied authority. Means what? Sending cases to the court, legal matters. Arbitration is not implied. Court is implied. Number 2, purchase and sale, implied. Purchase and sale, implied. Accounts preparation, implied. You have to prepare accounts to calculate share in profit. So which partner will have a power? Generally all. But in our firm, we divided that separately. A, take care of purchase sale. B, take care of accounts implied authority. C, take care of court legal matters. Separated. But you have to understand one very important point. Your division of powers, you three people know. How public will know? Public will see only implied authority. Notwithstanding means what? Ignoring any such restriction, any act done by a partner, in this case Mr. A, on behalf of the firm, which falls within his implied authority. Generally, purchase of furniture is an implied authority, will bind the firm, unless the person with whom he is dealing, M, knows of the restriction. Means if M knows of the restriction, protection will not be available, or else it will be. Next. So third party know about the restriction, or he don't know that he is dealing with the partner. In that case, he can't be, or else he will be protected. Remaining again expulsion. Same concept again. Okay. Remaining are only just using the name of the firm and doing the business. Even after that, you can collect the share in profits. All these small points will be there. These are all the core areas that we need to read. After that, read the question bank properly. One question will come in examination out of this. Okay. So prepare well. All the very best.